scenarios. So the first scenario is that they are going to start a new venture. In this regard, they need a capital amount of rupees 50 lakh. So they have to say me how they are going to generate those 50 lakh through various long-term sources, and after a stipulated period, they will be earning an amount of rupees 20 lakh as a profit. So how you are going to distribute it to your debt holders, and how you are going to retain your profit back to your business. You have to discuss on all these things. Okay? Shall we start?
So as per the scenario, so there are like main 5 objectives. What is like capital, like the as per like what is the meaning of capital and how much of the money what is going to come into the business, and as well as the capital structure and dividend policy, and as well as we go on to retail earnings, like after the dividend what you are going to do the next stage of the retained earnings. So let's move on with capital.
Capital is an initial investment brought into the business like bank loan, LIC, finance, equity, preference shares. That's all.
The capital, it is in a various sources of generating long-term capital. The long-term capital was debenture, equity capital, preference capital, retained earnings.
I am going to talk about the dividend. What is dividend? In a company, we gain profit. With the profit, we can distribute the profit into our shareholders. Divide the profit into shareholders and give them to the shareholders as a profit and the share.
Dividend policy is decision regarding how much profit is to retain future growth.
So as per the scenario, let's talk about the initial investment for the company, which is like 50 lakhs. In that, like we need to gain from the amount, like 50 lakhs by doing capital structure. There are like main 5 major capital structure, which are like preference share, in which you will sell it to your share to the particular family of the member of the companies, as they own the major part of the share and they own the ownership of the company, as well as the preference share, in which it is like similar like share, selling your stock share to the public. Only the difference between preference share and as well as the equity share. In the equity share, you sell your share to the public. In preference share, you sell your the share will remain to the family. So we go on to retained earnings. Retained earnings is something in which you will complete do a business, like you will do a previous business, or you have a profit. In that you will minus all your liabilities as well as all your expenses. Then you have a certain amount which you will invest into your business, invest retained earnings. And debenture is nothing about, it's kind of a loan without any guarantee. You have like with your goodwill you are going to buy the loan. As well as debt is nothing about, is something which you get the loan from banks as well as from other institutions. And in this scenario we will divide it into 2:1 ratio, in which we will get like 20% of equity share as like nearly like 20 lakhs. We use it as a equity share, as well as we use 10% debenture. Like we will go and we get some like which is like 10 lakhs from the borrow loan from the banks, as well as we go on with the preference share, which is like we are selling our share to the public, which is like nearly like 20 lakhs. So we will earn the amount like 50 lakhs as capital, initial capital, as well as when it comes to the next is dividend. After we earn the profit, which is like 20 lakhs, we will go on and share it to our dividend, the shareholders. Dividend is nothing about selling your, repaying your you're giving your extra profit money to your shareholders, like as a kind of goodwill or kind of like manipulating stuff. As well as if you go on, there are like certain number of types in dividends, like regular dividend, and as well as stable dividend, irregular dividend. In this regular regularly to your shareholders about the dividend amount. And irregular dividend is like sometimes it depends upon your profit amount where you will sell your. It depends upon the profit you gain in your business, and it is and as well as it depends on your board of directors. Like, do you need to give the dividend to your shareholders? It depends upon the company, as well as like there's no dividend policies. Like no dividend policies invest, you won't give your dividend to your shareholders, which is like kind of because like they use these kind of tricks to avoid more expenses. Like they use the profit amount directly to their expenses rather than giving to the shareholders. So like we will share our dividend to our dividend shareholders, then they will go to dividend policies. Dividend policies nothing like deal. It's like something which is kind of certain rules of policies which particular company have to give to your shareholders. Yeah, it's like we give to your shareholders and a certain kind of policies in which the company will have certain rules in which they have kind of some certain kind of regulation, like as per this thing, as per this amount of profit, I give my debentures to my shareholders, or as well as it depends upon the company's variation. There are like four numbers in dividend policies, like regular dividend, same thing like comes to dividends, regular dividend, stable dividend, irregular dividend, as well as no dividend. All these are the most familiar things which major company use according to their dividend policies. Regular dividend is similar, like the company will have certain amount of policies in which they have to give their the dividend share to the shareholders as a name of reputation. Like for example, you can use like ITC company as for shareholders example. They are one of the major companies who give dividend regularly to their shareholders. When it comes to stable dividend policy, dividend remains stable. They won't change or fluctuate. It remains the same. Like as per this month, I'll give. As per this many years, I'll give certain amount of dividend to my shareholders. Just remain and retains the same thing. And irregular dividend is nothing more. It depends upon the company's profit. All these stuff.
Certain phase of thing. First, you have started with the distribution of your capital and how does the business goes on through it. So this is what we will be discussing on the upcoming unit 3. So we will be discussing on capital structure. So what the people have discussed on capital structure, dividing the capital to various long-term sources, and how the dividends is distributed to people, and how does it benefit to the organization as well. So this is what we will be discussing in unit 3, capital structure and dividend policy.